The Dollar Milkshake Theory. Why Bitcoin pumps when USD strengthens. Here's something that breaks everyone's brain. Bitcoin's supposed to be this anti-dollar, anti-establishment, freedom money thing, and for years that made sense. Dollar goes up, Bitcoin goes down. Dollar weakens, Bitcoin rips. Classic inverse correlation, textbook stuff. Except lately, that relationship's been acting weird, really weird. There are moments when both the dollar and Bitcoin surge at the same time, and it's confusing the hell out of traders who think they understand macro. So what's actually going on here? Bit is Bitcoin still the hedge everyone claim it is, or is something bigger at play? And to the dollar milkshake theory. Quick disclaimer before we dive in. This is purely educational content. Always do your own research and never invest money you can't afford to lose. Alright, let's break this down. The dollar milkshake theory comes from a guy named Brent Johnson. He's the CEO of Santiago Capital, runs a hedge fund, been in finance for over 20 years. Not some random YouTuber making predictions. This guy has a actual skin in the game. Johnson came up with this theory back around 2018. It's been picking up steam ever since. Here's the basic idea. Imagine the global financial system as a giant milkshake. All the liquidity in the world, all the money sloshing around, every currency, every debt obligation. That's your milkshake. Now, the US dollar isn't just another ingredient in that shake, it's the straw. And when things get messy, where the global economy starts wobbling, that straw starts sucking up all the liquidity from everywhere else in the world. Why? Because the dollar is still the world's reserve currency. It's what everyone needs. You want to buy oil? Dollars. International trade? Dollars. Pay back your corporate debt? Better have dollars. Most people think the dollar's days are numbered. They see the debt, the money printing, the political chaos, and they assume we're heading for a dollar collapse. Johnson says the opposite. He argues the dollar is going to get stronger, much stronger, and it's going to crush every other currency on its way up. Now here's where Bitcoin enters the picture. For a long time, Bitcoin traded with a pretty clear inverse relationship to the dollar. Whether DXY, the dollar index, went up, Bitcoin went down. When DXY dropped, Bitcoin pumped. From 2020 through most of 2024, the correlation coefficient sat somewhere between negative zero point 0.3 and negative zero point 0.6. That's a solid inverse relationship, but it's not some law of physics. It's not guaranteed, and we're starting to see that play out in real time. So why does Bitcoin usually fall when the dollar strengthens? It comes down to liquidity and risk appetite. Where the Fed tightens policy, where they raise interest rates, where they drain liquidity from the system, the dollar gets stronger. But that also means capital becomes more expensive, borrowing costs go up, risk appetite goes down, and Bitcoin's still treated as a risk asset by most of the market. When money gets tight, investors sell their speculative positions and park their cash in safe haven assets, US Treasuries, the dollar itself. That's what happened in 2022. The Fed hiked rates aggressively to fight inflation. The DXY spiked to levels we hadn't seen in 20 years, and Bitcoin collapsed over 60%. Classic dollar milkshake dynamics. The US was literally sucking liquidity out of global markets. But here's where it gets interesting. According to the theory, there's a twist. The dollar can strengthen, can absolutely dominate, can destroy other currencies, but eventually that creates so much pressure, so much instability that the whole system risks breaking. Countries cannot pay their dollar denominated debts, emerging markets collapse, even developed economies start cracking under the strain. And when that breaking point hits, that's when investors flee into hard assets, gold, real estate, and potentially Bitcoin. Johnson's not a Bitcoiner himself. He's more focused on gold as the ultimate end game. But the crypto community has latched onto this theory because the logic extends naturally to Bitcoin. If you believe Bitcoin is digital gold, if you think it's a legitimate store of value outside the traditional financial system, then the dollar milkshake theory actually supports a massive Bitcoin bull case down the road. Think about it. The dollar sucks up all the liquidity, gets incredibly strong, wrecks every other currency, and then, at the peak of dollar dominance, when faith in all fiat currencies is shaken, where does capital go? Into assets that exist outside the fiat system entirely. Now, let's talk about what we're seeing right now in December 2025. The relationship is playing out exactly as the theory predicts. Bitcoin hit an all-time high above $126,000 back in October. Then what happened? It pulled back hard. As of mid-December, Bitcoin's trading around 87,000. That's a 30% drop from the peak. Not exactly the moon mission everyone was expecting. At the dollar, the DXY is hovering around 98 to 99, down from levels above 100 we saw in November. The Fed just cut rates by 25 basis points in December, bringing the target range down to 3.5 to 3.75%. So we've got a weakening dollar and Bitcoin still struggling. That breaks the simple inverse correlation too, right? Not really, because here's what people miss. Bitcoin's correlation with the dollar isn't is instant. There's lag. Changes in dollar strength takes weeks or months to fully show up in Bitcoin's price. Plus, Bitcoin's been dealing with its own headwinds. ETF outflows in late November and early December, risk off sentiment across markets, profit taking after the massive run earlier in the year. The macro backdrop is messy. The Fed's cutting rates, which should weaken the dollar and help Bitcoin, but they're also signaling fewer cuts ahead in 2026 than markets wanted. That's creating uncertainty. This tells us something important. The relationship isn't dead, it's just more complex than people think. Here's what the data shows. Bitcoin's correlation with the DXY over the past few years has ranged from negative zero point 0.3 to negative zero point 0.6 during major market cycles. That's a moderately strong inverse relationship. From 2020 through 2024, this held pretty consistently, where the dollar strengthened in 2022 during the Fed's aggressive hiking cycle. Bitcoin crashed over 60%, where the dollar weakened in early 2023. Bitcoin rallied, but on shorter time scales, days or weeks, Bitcoin can behave like a pure risk asset. It moves with stocks, with tech, with speculative flows. But over longer periods, months and quarters, the macro forces reassert thems- themselves, and that's when the inverse correlation with the dollar comes back. There's another layer to this. Bitcoin's relationship with the dollar also depends on why the dollar is moving. If the dollar is strengthening because the Fed is aggressively tightening, draining liquidity, raising rates, that's bad for Bitcoin. Capital gets expensive, risk appetite dies. But if the dollar is strengthening because other currencies are collapsing, because there's a global fight to safety, that's different. In that scenario, Bitcoin might actually catch a bid alongside the dollar, not because they're positively correlated, but because they're both benefiting from the same underlying force, which is loss of confidence in the broader fiat system. Let's talk about what this means practically. Bitcoin hit its all-time high of 126,000 in October 2025. That was driven by a combination of factors: ETF inflows earlier in the year, post-halving supply dynamics, institutional accumulation. But now we're in consolidation mode. The market's digesting those gains, and the dollar situation is adding complexity. If the DXY continues weakening from current levels around 98, especially if it drops toward 94 to 96 as some analysts project for early 2026, that could provide tailwinds for Bitcoin. Many projections still have Bitcoin reaching 120,000 to 150,000 by the end of 2026 if conditions align, but that assumes global liquidity expansion, continued institutional adoption, and a weaker dollar environment. But if the dollar say stays strong or surges higher, if the dollar milkshake really starts accelerating, Bitcoin might face serious headwinds in the short term. Unless, and this is the key, unless we reach that breaking point where the dollar's strength itself becomes the catalyst for Bitcoin adoption. That's the end game scenario. The dollar wins until it doesn't, and when faith in the entire fiat system cracks, Bitcoin emerges as the alternative. Here's how to think about positioning around this. First, stop treating Bitcoin like it's only one thing. It's not purely a risk on asset. It's not purely a dollar hedge. It's both, depending on the context. Second, watch the DXY. Where the dollar index is making big moves, that's a signal. A rising DXY in an environment of tightening liquidity is bearish for Bitcoin. A falling DXY is an environment of expanding. Liquidity is bullish. Third, pay attention to why the dollar is moving. Is it Fed policy? Is it global stress? Is it capital flows? The reason matters more than the direction. Fourth, consider the macro backdrop. If we're in an environment where multiple currencies are weakening simultaneously, and the dollar is the last man standing, that's classic dollar milkshake, and eventually that could push capital toward Bitcoin as the ultimate escape valve. Fifth, time horizon matters. Short term traders might get chopped up by the noise, but long term holders who believe in Bitcoin's role as a monetary alternative, the dollar milkshake theory actually strengthens that thesis. One more thing to understand, the dollar milkshake theory isn't saying the dollar is invincible forever. It's saying the dollar will win the beauty contest among fiat currencies. But winning a beauty contest among ugly contestants doesn't make you beautiful. It just makes you the least ugly. And that's where Bitcoin comes in. It's not competing in the fiat beauty contest. It's a different category entirely. So yeah, the dollar might suck up global liquidity. It might dominate other currencies. It might get stronger than anyone expects. But the stronger it gets, the more it exposes the fundamental problem with the entire fiat system, and the more people start looking for an exit. Quick question for you: do you think Bitcoin will ultimately benefit from dollar strength, or is the inverse correlation going to hold? Drop your thoughts in the comments. And if you want to stay ahead of these macro shifts, if you want to understand where money is flowing before it shows up in prices, stick around. I break this stuff down every week in plain English so you can actually use it. See you in the next one.